Attention trading professionals. Be careful of Nvidia and the dangers of irrational exuberance. Nvidia is a semiconductor company that has revolutionized the gaming industry with its high-end graphics processing units, GPUs. The company's focus creating chips for gaming, artificial intelligence, and autonomous vehicles has allowed it to tap into several growing industries. Nvidia has been around for almost 3 decades, and its phenomenal growth over the past few years has made it a significant player in the tech industry. From early 2015 to late 2020, Nvidia's stock price has seen an exceptional increase by almost 1,200%, making it a top-performing stock for many investors and traders. The increase in demand for advanced computing hardware for gaming, data centers, and, more lately, artificial intelligence has led to the surge in Nvidia's stock price, particularly with its recent breakout to all-time highs after announcing better-than-expected Q1 results recently. Be careful not to succumb to irrational exuberance. The term irrational exuberance was famously coined by the then Federal Reserve Chairman, Alan Greenspan, in a speech during the 90s dot-com internet bubble that was looming. This phenomenon is characterized by unchecked excitement about a company or an industry's growth potential, which blinds investors to its underlying fundamentals. Once irrational exuberance takes hold, investors and traders start buying up the stock, causing its price to skyrocket for fear of missing out. However, when the market eventually realizes that the stock's value is not justified, the bubble bursts, causing investors and traders to lose significant amounts of money. The media helps to fuel irrational exuberance. Headlines like Nvidia stock hits new closing high as chip makers' valuation approaches $1 trillion, or why Nvidia is suddenly one of the most valuable companies in the world drive the need to buy because you may have been missing out. And no one likes to be left behind. Investors are always on the lookout for the next big thing that promises to yield high returns. Talk of entering the $1 trillion valuation club have further tempted buyers into shares whose fundamentals don't really justify it. However, this eagerness can sometimes turn into obsession, leading to irrational exuberance. While the earnings report impressed most with revenue of $7.19 billion, up 19% from the previous quarter, and record data center revenue, bear in mind that Q1 2023 revenue was higher by more than 13%. Where the earnings report really drove in the buying was the Q2 guidance of $11 billion and the 28% growth in EPS, largely due to decreased operating expenses and data center revenue growth. Their gaming business, its number 2 segment by revenue, was actually down by 38% year over year. It's no secret that Nvidia is leading in the graphics processing and artificial intelligence markets. However, they are not alone in the race towards innovation. Competitors like AMD, Intel, and Micron have also heavily invested in these industries and pose a potential threat to Nvidia's dominant market position in GPUs. The emergence of new technologies and the innovative tools that will be brought about means that companies cannot afford to be complacent. In order to stay ahead, companies must continue to push the boundaries and invest in research and development to keep up with the rapid pace of technology. The future of the market will undoubtedly be shaped by those who are willing to embrace change and take risks to deliver cutting-edge applications rather than those who sit back and rely on their past successes. Trading turnover was more than 150% the daily average when it traded to its all-time high. For every buyer there is a seller, so someone was getting out. Always sell the breakout, they say. During periods of irrational exuberance in the past, investors tend to become overly optimistic about the future possibilities of an investment and discount any underlying risks that may result in losses. The historic tulip mania in the Dutch Golden Age, which dates back to the 1630s, is another example of how irrational exuberance took shape. During that time, people were willing to pay exorbitant prices for bulbs that they believed would bloom into beautiful tulips. And just like the dot-com bubble and the housing bubble, the tulip bubble burst, resulting in significant financial losses for many people. These examples demonstrate that irrational exuberance is not limited to one particular industry or era, but a lesson that investors must keep in mind when making investment decisions. History does repeat itself.